Hi there, it's Blair at Time Trades again. And in this video, we are going to go over some of the menu items, and I'm going to describe what these mean over here on the left-hand side, okay? So again, we're sticking with Litecoin as our example. And I'm just going to go over top to bottom what these menu items are and how they should be used. So starting with the juice. So what juice is about is it's really a leading indicator of solar activity. And what you'll find as you look at days where there's these spikes of juice activity or solar activity. This is expected solar activity. It's not actual solar activity. There is often a reaction in price around these spikes. So sometimes you'll see downward moves into the spike of juice and then a recovery afterwards. So we can see that here on November 18th. We can see that here on November 14th. There was a move down into the juice spike and then a move up. So often you'll see red bars just before the juice spike and then a move up afterwards. This is the kind of move that's sort of typical here with that we see on August 20th, where there's a decline into the juice spike and then the spike, and then there's a little bit of energy added to the stock, and then it moves up a little bit. So the way I suggest you use this is to treat every security differently. Observe how it reacts to these juice spikes. Some of them are very responsive, some of them not so much. I would say Litecoin is probably more on the not so much end of the scale, but yeah, often you'll find different symbols react quite nicely to juice spikes. So one example, let's take a look at the Qs, QQQ here. And the Qs do tend to react a little bit better to these juice spikes. You can see here's a great example, August 19th, price declined into it. We got a juice spike and then price moved up quite strongly afterwards. And here it is again in the middle of an uptrend on November 18th. The uptrend continued on for another couple of days. So in general, you can expect to see moves up the day of or the day in the days following a spike in juice activity. Okay, so that's the juice. Let's take a look at Gan Waves now. So Gan Waves are natural cycles that also tend to correlate with price. And again, I'm displaying these here so that you can use your neural network, your own brain, to identify any patterns in the Gan Waves that correlate with price. And probably the best example of this is with Bitcoin. Let's take a look at Bitcoin. If we go back to, turn on Gan Waves, if we go back to the price high here in April of 2021, okay? So you can see that there's a pretty consistent pattern here of highs during yellow. So we made a low during yellow here back in January, and then a high during yellow. So this was kind of the clue that there's a change in regime here, in that price has gone from making lows during yellow to highs during yellow. So it made a strong high here in February during yellow, and then another almost high, near high in March, and then another high in April. But then what happened is that pattern broke down. So in May, if that pattern were to continue, we should see a higher high during the same yellow period. We did not. Okay, that was our clue that that relationship was breaking down. That was our clue that there was a major change in behavior going on in Bitcoin. So this is how I like to use Gan Waves. Gan Waves make it useful to compare price behavior over natural cycles. And the yellow and blue periods are periods of similarity in this key natural cycle, okay? And again, we can see here how the breakdown in blue, after that flush down in May, the breakdown, we can start looking at the blue period to see what's going on. We made a low during blue here on May 25th, lower low on June 24th. And we failed to make a lower low in July. And again, that's kind of the clue here that as these lows get, I guess, weaker and weaker, meaning that they're not as low as they used to be, right? So this is indicative of an increase in bullish energy, and that and that certainly happened coming up out of that July low into the next yellow period. So again, use your own powers of observation, compare Gan waves with price behavior, look for patterns, look for when those patterns start to break down, and that'll give you a bit of a timing edge. Short-term waves are basically interplanet cycles, okay? So again, we're looking at natural cycles, and we're surfacing those to you so you can find ways to incorporate this into your analysis. Now, what I really like about short-term waves is if we go back to the NASDAQ QQQ and take a look at what happened around the COVID low with short-term cycles here. So here we are back in March, and you can see here that light blue peaked right at the COVID low, okay? So this is something that you will notice, is that often when these curves are changing direction, like making peaks or lows, or when they're crossing the zero line, like over here, those tend to give the best signals. When it comes to yellow, watch closely when yellow starts to decline, okay? And that also tends to be where signals occur. So here again is an example of light blue. We've got light blue changing direction around June of 2020, and the market reacted a little bit for a few days after that, okay? But light blue also is very powerful at the extreme. So here's light blue making an extreme low exactly at the same time in that price is making a medium-term low in September, okay? So again, look for these kinds of important timeframes where the blue curves, either light blue or dark blue, are changing direction or crossing the zero line. And same with yellow. Watch for when yellow is starting to slow down or change direction as well. There's nothing implied about the price, like where these curves are on the screen has no meaning with respect to price. These are simply timing indicators that we're surfacing to you. We found these to be influential in forecasting price, and we wanted to surface those to you and make it very easy to correlate with the actual price action, okay? So that is short-term waves. We'll turn that off and that off. Now let's turn on Gan Fans. Okay, so Gan Fans are drawn from the automatically identified peaks. So the way the machine learning works is it will identify the pivot highs, like here in September of 2020, and it will also identify pivot lows. If we scroll back here, here's another one, as you would expect, at the COVID low in March of 2020. So these Gan Fans are drawn from these automatically detected key areas. And we have an algorithm that we use to calculate and automatically identify these important areas. Now, one of the things that you may find as you scroll around is you may not like how the angle of the fans change. And the reason is that right now you see it says auto down here. The reason that the angle of the fan is changing is that the y-axis, the price axis, is automatically updating as new price it enters into the visible range of the chart. Okay, so that's always changing the aspect ratio of the chart, and it's therefore changing the angle of the fans. Now we can fix that by going over to the menu, and we can manually set the price per bar. So if we want to manually fix the price per bar to say, I don't know, 1.0, so this is $1 of queues per day, okay? We can do that. We can just type in 1 here and we're done. Another way of doing it is we can turn off the menu. We can actually drag our mouse on the price axis here. And this is the way I like to do it. So we can scroll over here, and let's say we want to set up these Gan fans so that this fan is right below this low here at 316. So I can just sort of grab this location on the price axis, on the y-axis, and drag it up until this low is right on top of that Gan fan. And all of the Gan fans will now share this same aspect ratio. Okay. So what's often really interesting about that is if you go back and set, say, for example, this Gan fan that started in March of 2021, and you set it to include, to properly bracket highs and lows that are important. And then you scroll around, you'll notice that all the other Gan fans are set to, will also bracket price really well. So this is one of the really interesting things about using Gan fans, is if you square the chart so that price is included within the within one Gan fan, that will often correctly set the squaring or the aspect ratio for all other Gan fans as well. Last thing I'll say about Gan fans, you might be looking at this line over here, okay, and wondering where the heck is that coming from? Okay, so when you mouse over these, you can see a little bit of text pop up that's probably a little small. This says this is the 1x1 up from 0 on 2019 1003. So when we set a low of a Gan fan, we draw actually 2 fans. We draw 1 fan from the actual price low, and we draw a second fan from 0. So in this example on March 5th, we can, let's see if we can see this one on screen here. There should be a Gan fan. If we zoom out a bit, we can see it. There should be a Gan fan, still zooming out, should be a Gan fan here that comes up from 0, and there it is. We can see that other one, that's this one here, that's yellow. So bottom line, when we draw Gan fans from lows, we draw 2 Gan fans, just the way WD Gan did it, 1 from the low price and 1 from 0. Okay, so that is the Gan fan feature, and I'm going to turn that off, and I'm going to turn this back to auto. And now we're going to cover perfect square weeks and perfect square trading days. Okay, so perfect square weeks. What is a perfect square? Perfect square is a number like 16 or 25 or 49. It basically has an integer square root. And WD Gan used a lot of these And because time trades is automatically counting or identifying pivot highs and pivot lows, we are also counting the number of trading days and perfect square weeks since those lows. So we can turn that on. And now we've got some boxes on the screen, and we can mouse over these, and it will tell us what happened a certain number of weeks prior. So in this particular box, it says this is 4 weeks from a pivot low on October the 4th. And we can see over here, there's a significant low on October the 4th. And this is an automatically detected pivot. And of course, the machine learning says, yes, that's a pivot because it is trained to identify pivots. And we also gave it the answer. We said this day was a pivot. If we go up here, here's an interesting one. This particular time period is 225 weeks from a pivot high in June of 2017. So we've got the ability to identify some of these very old yet still active time cycles from long forgotten major pivot highs or pivot lows. So that's one of the nice things about time trades, is how it will automatically identify these pivots and continue to project them forward. So these are incorporated into the machine learning. The machine learning uses this information to help make its forecast, but I also surface this information to you, the user, so that you can be aware of these pivots, and you can play around with this feature and see if there's some echoes of prior price changes that you would like to see if there's anything coming up in the near future. So some of these can be very old. For example, this one I'm mousing over right now is 529 weeks from a pivot low in August of 2011. Okay, so that is perfect square weeks and perfect square trading days. Strong bars is, it will simply shade the bars when I believe they are more than 2 standard deviations, okay? So this will identify the bars, the price bars that have more than a 2 standard deviation price change. So this way, it's easy for you to identify those. Sometimes they happen at the end of trends. You can see here in September, we got a cluster of strong bars near the end of trends. And same thing in May, and same thing in March. And looks like the same thing might have happened here in December, where we get a couple of strong bars right before a trend change. So that is another feature that I've incorporated into time trades. And then finally, there's net probabilities. So what net probabilities does is, this probably isn't a great example of it, but whenever there is some ambiguity in the forecast, for example, let's say, is there a day here where there's 2 probabilities in opposite directions? Well, basically what it does is, if there's 2 probabilities that are contradictory, like say probability of a move up on the same day as a probability of a move down, that can happen. What net probabilities does is it simply subtracts one from the other, and it nets it all out, so that there's a single net probability, and you don't have to do that in your head. So I almost always leave net probabilities on. Okay, so those are the major elements to the menu. I'm going to stop this video here and to keep it short, but thanks again for using time trades. Bye now.